Welcome to FundForum International here in Copenhagen. I'm Joanna Simpson. Joining me now is Hilde Jensen, Head of Fundamental Equities at Nordea Asset Management. Thank you very much for joining me today.
Thank you.
And just tell me a little bit about what the ESG Stars concept is.
Well, the STARS concept is really our sustainable framework. As the name suggests, we are fundamental investors. We invest in equities and we do bottom-up stock picking with a long-term horizon in terms of our investment window. And what we look at specifically are trying to find out which companies are tomorrow's winners in terms of having a sustainable business strategy. And we have a STARS framework that help us in our work, in our analysis. And what we try to look at are three different things, distinct things in the STARS framework. The first question we ask is whether a company has the ability to potentially outperform the index based on our integrated ESG and fundamental analysis. And if the answer is yes to that, we go on to the next question. And the next question is there a potential for this company to actually meet our minimum standards in terms of sustainability? So we have our own internal rating process where we look at each and every company, either rated A or B. C-rated companies are excluded. And then the final test for any company to make it into a STARS portfolio is whether or not there is opportunity for improvement of ESG factors. And if the answer is yes to that, then most likely it's a go.
And the gig economy is a big buzzword at the moment. In a nutshell, what is it?
So the gig economy is quite simply the movement from a full-time employment to part-time employment, just like the name suggests. And the interesting part about the gig economy is actually not a new phenomenon. It's been used for a very long time, and it might surprise some people that actually the sector with the most use of gig workers are actually the public services sector. And the other sectors that might use gig workers a lot is transportation, construction. You also find them in media. But it is quite a controversial area because there is a big difference we find in terms of how companies treat their part-time workers. And that's why we've looked at the industry, particularly in the food industry, food services delivery industry. In that industry, there's a particularly big difference in terms of how companies treat their workers. And that's why, from a fundamental investment point of view, it's possible for us to find those companies that could be tomorrow's winners.
So what should sustainable investors be looking for when investing in gig economy companies?
Yeah, so there, again, I think you have to do your homework really as a fundamental investor. And there are many things to look at, but perhaps the most critical risk factor for us in terms of sustainability is to what degree a company is really prepared as a strategy to treat their workers, their part-time workers, in a good way. And here, as companies become more and more global, we find that there might be significant regulatory risk to those companies that have not prepared longer term. So to use an example, we have invested in Takeaway.com. Takeaway.com is actually an interesting business model. It is a company operating primarily in Holland and in Germany, where they dominate the markets. And their business model is simply to connect restaurants with the end customers through a huge network of 31,000 restaurants. And this network, again, is built on their competitive advantage in providing these services. But what we find is that Takeaway.com actually, unlike some other companies, hire their delivery crew outright. That means that the delivery crew has the same labor rights as a full-time employee. So we think that is a sustainable model to go. It might be more costly upfront to do it that way, but companies find that it might be actually more productive way of organizing their labor. And we also think for that reason, Takeaway.com has less regulatory risks than some of the other operators in that industry. As a result, we invested in the stock earlier this year in our portfolio European Stars. And even though the stock has done really well, we think that there's further upside. So I think as a summary, I think you really just have to do your homework at the company level.
Hilde Jensen from Nordea Asset Management, thank you very much for your time.
Thank you.